Cathie Wood, the investor, the one who seems to love a bold bet on tech. She just can't seem to stay away from that buy button.
Even with the holidays right around the corner.
It's true. On December 23rd, she picked up shares in, you guessed it, 3 more companies.
3! Wow.
That's right, 3. So today, we're going to dive into what these picks tell us about, well, where she thinks the market is headed. We've got some Motley Fool articles breaking down all the details for us.
Yeah, and what's interesting here is that these aren't exactly, under the radar companies.
Right.
We're talking, Amazon,
Oh, yeah.
GitLab,
Uh-huh.
and 10x Genomics. So she's not just chasing the next big thing. There's a strategy at play here connecting these familiar names with emerging trends.
Okay, so let's start with Amazon. It seems like everyone and their dog owns Amazon stock already. I mean, the company hit an all-time high just last week, and it's already up, I think, a whopping 48% this year.
It's incredible.
That's double what the rest of the market is doing. So why is Wood still piling in?
Yeah, it might seem counterintuitive, right? But consider this. Amazon's operating profit and net income jumped by 55% last quarter.
Wow.
While everyone's focused on the headlines about, labor strikes and potential growth slowdowns, Wood's looking at the underlying strength of their financials.
So she's basically saying, don't sweat the small stuff. This company's a money-making machine.
Exactly. And remember, even with those headwinds, one analyst just, slapped a price target on Amazon that's 29% higher than where it's trading today. So there's still a lot of optimism out there, even for a company that seems like it's, already reached the top.
Okay, I'm starting to see how Wood's thinking about this. So if Amazon is this kind of the safe bet, the market leader with room to run, what about GitLab? Their stock is basically flat for the year, which feels almost, I don't know, boring compared to Amazon. What's the story there?
But boring can sometimes be a good thing, especially when you're talking about steady, predictable growth. GitLab provides a platform for software development, a market that just keeps expanding as more and more of our lives move online.
Right. Everyone's talking about how software is eating the world.
It really is.
So GitLab is basically selling the knives and forks.
Perfect analogy. And their financials are solid. Revenue is growing at a healthy 31%, and they're consistently beating profit estimates.
Great.
But here's where it gets really interesting. Their dollar-based net retention rate is a whopping 124%.
Hold on, can you unpack that for me? I know it's important, but those terms always make my head spin a little.
Sure thing. Basically, it means that their existing customers are spending a lot, like LT, more this year compared to last year.
Okay.
That's a huge vote of confidence, right?
Wow.
It suggests that companies are not only sticking with GitLab's platform, but they're actually relying on it more and more, which means they're finding real value in what GitLab offers.
So even though the stock isn't exactly cheap, Wood's saying, look at this growth, look at this customer loyalty. This is just the beginning.
Exactly. She's seeing the long-term potential even if the market hasn't fully caught on yet. But now, are you ready for a real head-scratcher?
Hit me with it. I live for these curveballs.
All right, let's talk about 10x Genomics. Now, this one is down a staggering 74% this year. We're talking one of the worst performers on the entire market.
Ouch. Okay, so why is Wood touching this thing with a 10-foot pole, let alone buying more? What am I missing here?
It's definitely a contrarian play, that's for sure.
Yeah.
10x Genomics focuses on cutting-edge tools for biological research. Think analyzing individual cells. It's really high-tech, specialized stuff.
That sounds like a company with a bright future, not one that's circling the drain. What went wrong?
Well, their revenue actually declined last quarter, and they're still not profitable. And that's spooked a lot of investors, which explains the stock's massive drop.
So this isn't just a bump in the road. It's a full-blown market revolt. I'm even more confused about Wood's strategy now.
Well, think of it this way. While everyone else is running for the hills, Wood's seeing an opportunity. She's essentially saying, I believe in the long-term potential of this technology, even if the market doesn't right now.
Okay, so she's doubling down on her conviction, even when everyone else is losing faith. This is starting to feel like a pattern here.
You're catching on. Now, let's connect these 3 picks back to Wood's overall investment philosophy. What do they tell us about how she views the market?
Well, it seems like she's not just buying companies. She's buying into stories. Amazon, the market leader that defies the doubters. GitLab,
Yeah.
the steady grower with untapped potential, and 10x Genomics, their fallen angel with a chance of redemption. There's a thread of optimism running through all of these picks.
Exactly. She's looking beyond the headlines and the short-term fluctuations, focusing on the long-term potential that she sees in these companies and the trends that they represent. It's a high-risk, high-reward approach, and it's not for everyone.
I'm starting to see how observing Wood's moves can be so valuable, even if you don't follow her picks exactly. She's not just throwing darts at a board,
Yeah.
There's a thought process here that we can learn from.
Absolutely. And that's what makes this deep dive so fascinating. We're not just, analyzing stocks. We're dissecting a successful investor's mindset.
Right. This is way more interesting than just reading a stock report. Okay, so we've got Amazon, the market titan, GitLab, the steady climber, and 10x Genomics, the wild card. What else can we glean from Wood's shopping spree?
Well, think about it this way. These three picks represent very different levels of risk and potential reward. So what does that tell us about Wood's risk tolerance?
Well, she's clearly not afraid to swing for the fences, especially when she believes in a company or a technology.
Right.
But she's also not putting all her eggs in one basket. There's a balance here between playing it safe and taking calculated risks.
Exactly. And that's an important lesson for any investor. You don't have to mimic her picks exactly, but understanding her approach to risk can help you evaluate your own portfolio and your own comfort level.
Okay, I'm officially hooked on this Cathie Wood as a case study approach.
I like that.
So we've got the big picture, but let's zoom back in on the details. What are some of the key takeaways for each of these individual companies that you think our listeners should really pay attention to?
Great question. With Amazon, it's about looking beyond the headlines. Yes, they're facing some challenges, but the core business is still incredibly strong.
Right. Don't get distracted by the noise. Focus on the fundamentals.
Exactly. With GitLab, the key takeaway is the power of steady, consistent growth in a booming market.
Yeah.
Their financials tell a compelling story, and Wood clearly believes there's much more to come.
So sometimes, slow and steady really does win the race.
What about 10x Genomics? What's the lesson there?
This one is all about conviction and risk tolerance. Wood is betting big on a turnaround, even when the market is saying otherwise. It's a high-stakes gamble, but it highlights the potential rewards of contrarian investing if you're willing to stomach the volatility.
Okay, so we've got our market leader, our steady climber, and our wild card. But before we move on, I'm curious, what's your take on Wood's decision to buy 10x Genomics? Do you think this is purely a bet on a turnaround, or could there be other factors at play?
That's a great question. And while we can't know for sure what's going on in Wood's mind, I think there are a few possibilities here. First, she might genuinely believe that 10x Genomics is significantly undervalued right now and that the market is overreacting to their recent struggles.
So basically, she's buying low, hoping to sell high when the company inevitably bounces back. Exactly. But there could be, other motivations as well. Perhaps she sees 10x Genomics as a potential acquisition target. Their technology is cutting edge, and a larger company with deeper pockets might be willing to pay a premium to acquire them.
Okay, so it's not just about betting on a turnaround. It's about recognizing the strategic value of a company, even if it's struggling.
Precisely. And that's an important nuance to keep in mind when analyzing, any investor's moves. There's always more to the story than meets the eye.
This is getting really interesting. So we've unpacked Wood's picks, we've explored her strategy, and we've even started to dissect her motivations. What else can we learn from this shopping spree?
Well, think about it this way. These three picks represent, three very different investment approaches.
Oh, okay, I see where you're going with this. We've got the blue chip play with Amazon, the growth story with GitLab, and the high risk, high reward bet with 10x Genomics.
Exactly. And that diversity is crucial for any investor to consider. It's not about putting all your eggs in one basket. It's about finding a balance that aligns with your risk tolerance and your investment goals.
So it's like building a well-rounded meal. You need your protein, your veggies, and maybe a little dessert if you're feeling adventurous.
I love that analogy. And that's a great segue into our next discussion point. We've talked about what Wood bought, but let's dive deeper into why these choices matter to you.
Okay, I'm ready to connect the dots. How can understanding Wood's moves help our listeners become better investors themselves?
Well, for starters, it forces us to think beyond the headlines, right? Just because a stock is down doesn't mean it's a bad investment. And just because a company is popular doesn't mean it's a sure thing.
Right. We need to dig deeper, look at the fundamentals, and try to understand the story behind the numbers.
Exactly. And that's where the real insights lie.
Okay, so we're thinking critically, we're looking beyond the hype. What else can we learn from Cathie Wood?
Well, she also reminds us of the importance of conviction and patience, right? She's willing to bet against the market when she believes in a company or a technology, and she's not afraid to hold on for the long haul, even when things get bumpy.
So it's not just about picking the right stocks.
Mhm.
It's about having the courage to stick with your convictions, even when the market is testing your resolve.
Exactly. And that's a valuable lesson for any investor, regardless of their risk tolerance or investment style.
Okay, I'm feeling inspired. But before we get carried away, let's inject a dose of reality here.
Always a good idea.
Cathie Wood is a professional investor with a team of analysts and access to information that most of us don't have.
Right.
So how can we realistically apply her approach to our own portfolios?
That's a great point, and it's important to remember that we're not trying to replicate her portfolio exactly. What we're doing is learning from her process, her way of thinking, and her ability to identify potentially disruptive trends.
So it's more about adopting her mindset than copying her trades.
Exactly.
Yeah.
And that mindset is all about looking for opportunities where others see risk, being willing to challenge conventional wisdom, and having the patience to let your investments play out over time.
Okay, I'm starting to see how this all comes together. We're not just analyzing Cathie Wood's picks. We're using them as a springboard to improve our own investment approach.
Exactly. And that's what makes these deep dives so valuable. They're not just about information, they're about inspiration and empowerment.
I love that. So we've got the big picture, we've got the individual company insights, and we've even started to connect these lessons back to our own portfolios. But before we wrap up this part of our deep dive, let's take a step back and consider the broader implications of Wood's investments.
Okay. I'm intrigued. What are you thinking?
Well, she's clearly betting big on disruptive technologies and innovation.
Right.
So what does that tell us about the state of the market as a whole? Are we on the cusp of a major technological shift, or is this just another hype cycle?
That's a fantastic question, and one that we could probably debate for hours.
Yeah.
But I think it's safe to say that Wood's continued bullishness, even amidst some economic uncertainty, suggests a belief that innovation and technological advancement will continue to drive significant value creation in the years to come.
So she's essentially saying, don't bet against human ingenuity.
Exactly.
Right.
And that's a powerful message, especially in times of uncertainty.
Yeah. Okay, so we've got innovation, we've got disruption, we've got a healthy dose of optimism. What else can we glean from Wood's latest moves?
Well, I think it also highlights the importance of staying informed and being adaptable, right? The world of investing is constantly evolving, and what worked yesterday might not work tomorrow.
Right. We need to be willing to learn, unlearn, and relearn as the market changes.
Exactly. And that's where these deep dives come in. They're not just about providing information. They're about helping you develop a framework for thinking critically about the market and making informed decisions.
So it's like we're building a mental toolkit, equipping ourselves with the knowledge and the skills to navigate the ever-changing world of investing.
I love that analogy. And with that toolkit in hand, we're ready to tackle the next part of our deep dive.
Okay. I'm excited to keep exploring. But before we move on, let's leave our listeners with a little something to ponder.
Sounds good to me. What do you have in mind?
Well, we've talked a lot about Cathie Wood's approach to risk, but how does that compare to your own? Are you more comfortable with playing it safe, or do you embrace a bit more volatility in pursuit of potentially higher returns?
That's a great question for our listeners to consider. There's no right or wrong answer. It's all about finding an approach that aligns with your individual goals and comfort level.
Exactly. So as we wrap up this part of our deep dive, take a moment to reflect on your own investment style and how you might be able to incorporate some of the lessons we've discussed today.
And remember that the journey of investing is all about learning, adapting, and constantly striving to improve.
Well said. Now let's take a quick break, and when we come back, we'll delve even deeper into Cathie Wood's fascinating world of investment. Stay tuned.
Welcome back. Glad to have you with us as we continue to, kind of explore these moves that Cathie Wood's making.
Yeah, I'm really starting to appreciate how much we can learn from observing her strategy, even if we don't follow her picks exactly.
Right, exactly. It's all about absorbing those insights and applying them to, our own unique situations. So let's pick up where we left off. We were discussing, that idea of risk tolerance and how Wood's portfolio reflects a balance between kind of playing it safe and taking calculated risks.
Right. It's like she's not afraid to, swing for the fences, but she's also not betting the entire farm on any single outcome.
Right.
There's a diversification strategy at play here.
Yeah.
Which is something every investor should be thinking about.
Absolutely. Yeah. Diversification is crucial for, managing risk and potentially enhancing returns over time.
Right.
And it's not just about, spreading your investments across different stocks. It's also about considering, different asset classes, different sectors, and even different investment styles.
Okay. So we're not just putting all our eggs in one basket. We're creating a basket of baskets. I like that visual.
Exactly.
Yeah.
Exactly. And by diversifying effectively, you can potentially, weather market storms more effectively and position yourself for long-term growth.
This is making me rethink my own portfolio. I might need to add a few more baskets to the mix.
That's the spirit. It's all about continuous learning and improvement. And now let's shift gears a bit and talk about another important aspect of Wood's investment philosophy. Patience.
Oh, yes, patience.
Yeah.
That's the one virtue I'm always struggling with, especially when it comes to investing. It's so tempting to, chase quick wins or panic sell when the market dips.
I understand completely. We all feel that urge sometimes. But Wood's approach, it reminds us that investing in these disruptive technologies often requires a long-term perspective.
Right.
These companies might face, short-term volatility, but if their innovations prove successful, the payoff could be, it could be substantial.
So it's not just about buying the right stocks. It's about having the discipline to hold on for the ride.
Right.
Even when it gets a little bumpy.
Exactly. And that's a valuable lesson for any investor, regardless of their experience level.
Yeah.
It's so easy to get caught up in the day-to-day fluctuations of the market, but the real wealth is often created by staying the course and letting your investments grow over time.
This is making me think about how often I check my portfolio.
Yeah.
Maybe I need to take a step back and adopt a more set it and forget it approach.
That's a great idea. It can be really helpful to, detach yourself from the short-term noise and focus on the long-term trajectory.
Okay. I'm officially adding patience to my list of investment resolutions for the new year.
Here you go.
Now, let's circle back to something we touched on earlier, the broader implications of Wood's investments. She's clearly betting big on innovation and technological advancement.
Well, right.
So what does that tell us about the future of the market?
That's a fascinating question and one that we could probably, spend hours dissecting.
Right.
But I think it's safe to say that Wood's, continued bullishness, even amidst, some economic uncertainty, suggests a belief that innovation, will continue to be a major driver of growth in the years to come.
So she's essentially saying, don't bet against human ingenuity.
Exactly. And that's a powerful message, especially in times of uncertainty. It reminds us that progress is inevitable, and those who embrace innovation are likely to be rewarded in the long run.
Okay, I'm feeling inspired. But before we get carried away, let's inject a dose of reality here. Cathie Wood is a professional investor with a team of analysts and access to information that most of us don't have. So how can we realistically apply her approach to our own portfolios?
That's a great point. And it's important to remember that we're not trying to, replicate her portfolio exactly. What we're doing is learning from her process, her way of thinking, and her ability to identify potentially disruptive trends.
So it's more about adopting her mindset than copying her trades.
Exactly. And that mindset is all about, looking for opportunities where others see risk, being willing to challenge conventional wisdom, and having the patience to let your investments, play out over time.
Okay, I'm starting to see how this all comes together. We're not just analyzing Cathie Wood's picks. We're using them as a springboard to improve our own investment approach.
Exactly. And that's what makes these deep dives so valuable. They're not just about information. They're about inspiration and empowerment.
I love that. So we've got the big picture, we've got the individual company insights, and we've even started to connect these lessons back to our own portfolios. But before we wrap up this part of our deep dive, let's take a step back and consider the human element of investing.
Okay. I'm intrigued. What do you think?
Well, we've talked a lot about the numbers, the strategies, and the trends, but investing is also about emotions, psychology, and our own personal biases.
That's a crucial point, and it's something that's often overlooked in discussions about investing. Our emotions can have a huge impact on our decision making, sometimes leading us to, make irrational choices that can hurt our portfolios in the long run.
Right. Like that time I panicked sold all my tech stocks after one bad news cycle, only to watch them skyrocket a few months later. Lesson learned.
We've all been there, and that's why it's so important to be aware of, our own emotional triggers and develop strategies for managing them effectively.
Okay. So we're talking self-awareness, emotional intelligence, and maybe even a little bit of therapy thrown in for good measure.
Exactly. Investing is as much about understanding ourselves as it is about understanding the market.
This is getting really deep.
Yeah.
I love it. So how can we become more emotionally intelligent investors? What are some practical tips for managing our emotions when the market gets volatile?
Well, for starters, it's important to have a clear investment plan and stick to it even when things get rough. Having a plan can help you stay grounded and avoid making impulsive decisions based on fear or greed.
Right. It's like having a roadmap, to guide you through the wilderness.
Exactly. And it's also helpful to diversify your portfolio effectively, as we discussed earlier. This can help you cushion the blow when certain investments inevitably go down, reducing the emotional impact of those losses.
So we're back to our basket of baskets.
Yeah.
Diversification is the key to both financial and emotional stability.
Absolutely, yeah. And another key tip is to focus on the long term. Remember, the market is cyclical, and there will always be ups and downs along the way.
Right. It's not a sprint, it's a marathon.
Exactly. And by staying focused on your long-term goals and tuning out the short-term noise, you can ride out the market's inevitable fluctuations with, greater peace of mind.
Okay, I'm feeling more zen already. So we've got our plan, we've got our diversified portfolio, and we've got our long-term perspective. What else can we do to keep our emotions in check?
Well, it's also important to stay informed, but not overwhelmed, right? Keep up with market news and trends, but don't let the constant barrage of information dictate your every move.
Right. It's easy to get sucked into the 24/7 news cycle.
It really is.
And start making decisions based on fear or hype.
Exactly. So find a balance that works for you. Stay informed, but don't let the news cycle, dictate your investment strategy.
Okay, I'm starting to see how all these pieces fit together. It's not just about the numbers. It's about having a holistic approach to investing that incorporates our emotions, our psychology, and our long-term goals.
Exactly. And that's what makes this deep dive so much more than, just a stock analysis. We're really exploring the human side of investing and how to navigate this complex world with both wisdom and compassion.
I love that. Okay, so we've covered a lot of ground in this part of our deep dive. We've talked about diversification, patience, the power of innovation, and even the importance of emotional intelligence.
Right. We certainly have.
What are your final thoughts as we prepare to wrap up this episode?
Well, I think the key takeaway for our listeners is this. Cathie Wood is a fascinating and inspiring figure in the world of investing.
Yeah.
And while we don't have to agree with every single one of her choices, there's a lot we can learn from her approach, her mindset, and her commitment to pushing the boundaries of what's possible.
Beautifully said. So as we head into the final part of our deep dive, let's encourage our listeners to continue exploring, continue learning, and continue challenging themselves to become the best investors they can be.
And remember, the journey of investing is a marathon, not a sprint. So stay focused, stay disciplined, and enjoy the ride.
All right, so we are back for the final part of our deep dive into Cathie Wood's latest stock picks. I have to say, this has been way more enlightening than I thought it would be. more than just skimming those headlines.
Well, absolutely. I totally agree. It's amazing what you can uncover when you peel back the layers and really look at the motivations and strategies behind these investment decisions.
Right. It's not just about the stocks themselves. It's about those broader lessons that we can learn, by observing how a successful investor like Wood navigates the market.
Right. Exactly. And one of the key themes that's emerged from our discussion is this idea of thinking differently, challenging conventional wisdom, being willing to kind of embrace that contrarian perspective.
Yeah. That's been a recurring theme throughout our whole deep dive.
Yeah.
From Amazon, that market leader that some are starting to doubt, to 10x Genomics, the fallen star that Wood believes has the potential to rise again. She's constantly challenging our assumptions, encouraging us to look beyond the surface.
Well, yeah, she's definitely not afraid to go against the grain, and that's a valuable lesson for any investor, regardless of their experience level.
It's so easy to get caught up in the herd mentality, following the crowd and making decisions based on fear or hype.
Right.
But Wood's approach reminds us that sometimes the best opportunities are found by taking the road less traveled.
Absolutely.
Yeah.
And that brings us to a crucial question for our listeners. What's your contrarian edge? What unique perspective do you bring to the table that might allow you to see opportunities that others are missing?
That's a great question to ponder. It's so easy to get swept up in the latest trends and hot stocks, but true success often comes from having the conviction to forge your own path.
Right, exactly. And that might involve focusing on a niche sector that you're particularly passionate about, or developing a deep understanding of a specific company or technology that others are overlooking.
It's about finding that area where your knowledge, your insights, and your passions kind of intersect. Right? That's where the real magic happens.
I love that. It's about leveraging your unique strengths and perspectives to gain an edge in the market.
So as we wrap up our deep dive into Cathie Wood's latest stock picks, I want to leave our listeners with this final thought. Don't be afraid to think differently, to challenge the status quo, and to explore those uncharted territories. That's where the real discoveries are made, both in investing and in life.
Beautifully said. And remember, the journey of investing is an ongoing process of learning, adapting, and evolving. So stay curious, stay engaged, and never stop seeking out new knowledge and perspectives.
And that is a wrap on our deep dive. I hope our listeners enjoyed this exploration of Cathie Wood's investment strategy and came away with some valuable insights to apply to their own portfolios.
It's been a pleasure joining you. Until next time, happy investing, everyone.